What's up, you guys? So we're here from OneGlanceTrader.com, and I'm super excited to be releasing the brand new version of the OGt Price Action Indicator exclusively for TradingView. And this indicator is absolutely free. You can add it to your charts by going to the indicator section, either on the TradingView browser-based platform or the app as well, which we'll go through inside this video. Now, if you're interested in making your own indicators exclusively for TradingView and you want to know the coder that I personally use, you can click the first link in the description below. I've used him now for all my TradingView indicators that I've got on my channel, and he's absolutely amazing. And make sure you reference OGT for him to give you a discount on your indicator quote. So as you guys can see now, I've got the indicator here, and if you guys knew the first version of the indicator, we had the engulfing pattern, which was the first pattern released on this particular indicator. And now what we've got, as you can see, we've now got the Doji pattern also included. So what is the Doji pattern? So if I zoom in over here, the Doji pattern is a pattern where the body of the candle, so the open and the close, are relatively close together. And you can define in the settings, which we'll go through, as a percentage how far wide you want the open and the close to give you more or less signals of a particular doji. Now there's different types of doji, like a gravestone or a long-legged doji. What this indicator does, it's coded to take all those kind of dojis into account. As well. So you can see in some examples where you don't see dojis, and that's because the percentage gap between the open and close that I've selected as part of this is either too big or too small, so therefore is not showing as a signal. But what it does is it gives you a lot of signals, because there's a lot of candles where the bodies in this particular example, and this is a GBP JPY 4-hour chart that I'm showing over here, that shows you the wide range of dojis, and that's what I wanted to do, was just show you a lot of dojis so you can kind of see how this pattern works. So if you wanted to download this indicator or apply it to your charts, the first thing you need to do is click on the kind of FX section, and if you type OGT, you will see here that in the community scripts that you've got all my OGT indicators, and it's called the OGt Price Action Indicator. And I know some of you have commented that that my indicators sometimes get disappeared, and that's mainly down to TradingView taking my indicator down because it's not quote unquote very unique. But hopefully this time round, because I've got the engulfing and the doji pattern in there, TradingView do not take this indicator down. If that does happen, I will copy and paste the code or give you the notepad file for the code, so you can just apply it to your own charts and you don't need to worry about going to the public library to go download it. So what you do is that you click on it there, and it gets added to your chart, as you can see over here. Now if we have a look at the actual settings, one of the differences, now that we've got a second price pattern in there, we have split the two sections up into different orders, and as we add more and more price patterns in this, we will section them out in their individual price pattern settings that you can do. So the first thing is you can turn them on or off. So if you didn't want to see the doji, for example, you can do that, so therefore it cleans up your chart, because I know some people like to only see a particular price pattern. So that option has been added as part of this new version, so then we don't clutter up the charts. And just very quickly, in terms of the engulfing, the options you have available to you, you've got two options, which is check number of candles. And what this does is this looks at the mother bar, so the second bar of the engulfing candle. What it does, it checks to see if the range of the mother bar, i.e. the second candle, is greater than X number of previous candles. So in this example, it's 5. It doesn't need to necessarily engulf all 5 candles. What it does need to do is the range needs to be bigger than the previous 5 candles. So that's what that is. And generally, the bigger the mother bar, in compared to its previous candles, the more reliable the signal is. And this second setting is the minimum percentage of the engulfing candle body. And what this looks at is the actual body of the bar has to be a minimum of 60%. So how much fill in green or red should the candle be? The minimum 70. I've just put 60 for demonstration purposes here. And again, the bigger this number, the more reliable the signal, but more potentially less signals you're going to get, because you're tightening your criteria. So that's the engulfing bar, and we'll go through some examples of that in this particular chart. And then we've got the doji, and the only user input for the doji is as a percentage the difference between the open and the close. Now you've got to really play with this setting depending on what chart you're looking at, because you've got some currency pairs that have 3 decimal places, some have 5 decimal places. You've got indices that are slightly different, ETFs that are slightly different, and you've got stocks that are also different. So when you get this, you'll have to play around with the setting, due to, because this is a percentage, and this is a percentage of regardless of how many decimal places that there are. So once you load this on your chart, it will start to make sense to you, and you'll kind of get a feel to it. And again, the bigger you put this percentage number, the more signals you're going to get, the less signals you're going to get, just because you're increasing the width of the body of that particular candle. So hopefully that's kind of clear in terms of that. And you've got all your style settings, and you can change all the colors and whether you want it visible on all charts and all that kind of good stuff. So what I want to do here is just take a quick screenshot of this and just walk you through how you can use the doji and the engulfing bar as well. So if I zoom in just a little bit so you can kind of see what that kind of looks like. Let's just rub that out because we don't need that. Let's go with black, and with this color setting over here. So what we've got here is let's do the engulfing bar first, because I think it's probably the easiest one to kind of understand. So an engulfing bar can either be a continuation pattern or a reversal pattern. So in this particular example over here, where we've got a bullish engulfing bar, you can see that the price is going up, and we've got a bullish engulfing candle where the mother candle itself is green, and it engulfs completely that first bar. And as you can see, price continues to go up from there. The second signal is this one over here. So price went down, came back up, bullish, bearish engulfing. So the candle is red, the range of the candle greater than the previous bar, and then that signaled off this potential downtrend. And then you've got a bullish one. As you can see, price then suddenly goes back up, and now you see this massive bearish engulfing right next to all this indecision dojis, which we'll talk about. And my assumption is that price will continue following this kind of overall downtrend. So the way, as I mentioned inside the bearish engulfing video that I did, I kind of look to use this at support and resistance areas or continuation of the trend. So for example, this particular bullish engulfing, sorry, there is no like support kind of area. You could argue that this is resistance that's now turned into support, but nothing really from a confidence level perspective that I would trade this bullish engulfing. This one to me is probably this one and this one were probably the two, because they are continuing with the long-term trend. So that is why or how I like to use engulfing patterns. So if I just take another screenshot, it's probably just a bit easier to kind of see what's going on here. And then now we've got the dojis, and again, doji is an indecision candle. It doesn't give you a direction on whether price will continue going up or continue going down. What I like about dojis, especially in trending markets, as you'll see here in a second, as you see trends go down, up, down, up, down, up. And it's at these areas over here is where you start to see indecision and doji candles form, where when the bears are coming in to push price down, we've got indecision happening, which potentially could be a price up. So if we have a look at this section over here, you've got dojis at this kind of area, you've got a pullback up, pullback down, you've got a doji, a little pause there, a little pause there, a little pause there, and then you've got some more dojis there, which again could either signal a top, or in this particular case signal it down. So again, you can see throughout this whole process over here where you've got these indecision candles by these small bodies and bigger wicks, that there is no control from the bulls or the bears. And then I wouldn't take signals on these particular dojis. What you're looking for is, in this example over here, some dojis and then a bullish followed by a bullish engulfing candle. And if I zoom in there and I take this off here, which kind of will hopefully give you some movement there. So we've got a move up, move sideways with dojis, and then that bullish engulfing. That signal there between a doji and a bullish engulfing is, again, gives you that confluence that this trend is looking to continue. Even in this example over here, you've got some strong there, doji formed. You've got a strong bull candle, but it doesn't engulf the previous candle, so it's not a bullish engulfing. However, again, that's another strong signal that we're looking to continue to move up in the in the trend. So then now in another example, if we go into this section over here, whereas you got your move up, you got your doji, but you don't get your bullish signal going up. You've actually got a bearish move going down. And again, it's not an engulfing bar, because you can probably see, if I just remove that, you can see that the top of that range, if I can grab it, is slightly above. So if it was slightly higher, if the wick was up to there, we probably would have got a bearish engulfing bar at this particular point. But you can see here that this has formed a top. You might have probably seen divergence on the MACD or something to give you another confluence that price is going down. And then again, you can see again, complete is that you can see that again. So now we've got forming a downtrend, of where now you've got price is now going down. You've got this doji candle and then momentum going towards the downside again to kind of take a trade at that area there. So hopefully that's starting to make a bit more sense of how you can use it during kind of a trending market. If we zoom into this area over here, look at this. This here is, look how many dojis we've got. Look at these small bodies, big wicks. You've got some consolidation area where price is really deciding on where to really go from this kind of area. And that's where, trading dojis like this bar here, or in this middle, like in this range, you wouldn't be trading this, but it's giving you an indication that this actual downtrend that's happening here could potentially be reversing. And it wouldn't surprise me if this area had some bullish divergence on a MACD or an RSI to go get a pull up. And here again, you've got a classic one, as we kind of really had. We had some doji candles over here by this big bearish candle, and I wouldn't be surprised if price continues to trade down. Let's have a look to see what's happening with price. It's kind of really staying. I'm trying to draw on the screen. It's kind of really staying inside this kind of area at the moment. But hopefully you can see now, with just these two price patterns alone, you can make better trading decisions. And if you overlay other confluence factors like moving averages and RSI, MACD, all the usual stuff that we like to trade with, you can see how that this price action indicator can help you make better trading decisions. So that's all I wanted to really kind of share with you guys. Please like, please subscribe, please comment down below. I'll be working on the next price pattern, and if you're interested in coding your own TradingView indicator, make sure you check out my coder, first link inside the description. He's on fiverr.com, he's really good, and make sure you mention OGT to get a discount. So appreciate you all, take care, and I shall see you guys in the next video.